Ladies and gentlemen, my name is Greg Michalowski. Today's date is September 1st, 2014. And I'm going to talk to you a little bit about labor and Labor Day, because it is Labor Day here in the United States, Labor Day in Canada as well. So what is Labor Day? Well, here in the United States, we celebrate Labor Day on the first Monday in September. It is a celebration of the American movement and is dedicated to social and economic achievements of workers. That is the true definition of Labor Day. What we know it here in the United States is also a day off from work. It's a way to end the summer season. A lot of kids go back to school starting this week, and a lot of dads and moms go back to work as well after the summer season. It also is a day where you take in a ball game, maybe baseball or football. It's a time when you go to the beach or your lake. You have hamburgers and hot dogs on the grill and apple pie, and the family gets together. It's all those sort of things, those happy things, and so that is what Labor Day means to a lot of Americans and a lot of Canadians, I'm sure, as well. So what about the labor conditions in the major economies around the world? And this is the graphic representation of the unemployment rates and the labor trends of the 7 major industrial economies around the globe. And as you can see, the Eurozone, that blue line at the top of the page, they've not had a good time of it. They had the rate move higher along with other nations after the 2008-2009 recession. They also had their own debt crisis, which caused the second move to the upside. Government started to cut back on their spending. Budgetary constraints led to higher unemployment, and that pushed the unemployment rate in the Eurozone up to 12%. It's since come down to 11.5%, but relative to other countries, or most of the other countries, the rate of decline is much slower, and the rate is obviously much higher than the other industrial countries around the world as well. The other surprise, maybe to some, is the Australian unemployment rate. This green, darker, well, actually it's a lighter green line right there. The Australian unemployment rate has been ticking up and stands at decade high levels of about 6.4%. Last month it surprised to the upside from 6.1 to 6.4%. A lot of it has to do with China slowing down in their demand for mining resources, and also the investment cycle within Australia in the mining industry started to slow down as well. So that has had a big impact on the employment situation in Australia, leading to higher unemployment, trying to transition out of a mining industry or economy or an economy that's been supported mainly by mining into something that more domestically oriented. So that's the global trends. Let's take a look at what some of our central bankers are saying about their employment situation. We were fortunate enough to have the Jackson Hole Summit, which took place a week and a half ago, and during that time, it was the focus was on employment. So we had a lot of comments from central bankers, and I thought I'd share them with you so that you're up to date of what central bankers are thinking at the moment. In the Euro area, Mario Draghi, the ECB president, said this: the long-term cohesion of the Euro area depends on each country in the Union achieving substantially high level of employment. This is a little bit of a shift away from the ECB providing the stimulus to now the governments and the individual nations within the EU providing the stimulus for the employment growth. What we do know is that over the last few years, there's been a lot of talk about budgetary constraints. And when you have budgetary constraints, what does that do to spending? It lowers that spending. And what does that do to employment? It increases the unemployment rate. And so now Mario Draghi is saying, hey, it's time that we focus more on the employment situation. And the reason why is outlined in his second comment here, where he said unemployment is at the heart of the macro dynamics that shape short and medium-term inflation. Aha! Now we get it. The high unemployment rate is impacting inflation to the negative side. The inflation rate has moved down to 0.3% on a year-on-year basis. The core is at 0.8, well below the 2% target that the ECB is looking for. Mario Draghi is concerned about the negative impact of high employment on the inflation rate. It is getting scary to him. His comments here from the Jackson Hole Summit outline that fear that he has. And so it's likely that the ECB continues and stays supportive from their perspective, but he's going to be harping on the individual nations to also increase their spending to increase employment within each country. Now, what's happening in the United States? Well, Janet Yellen also spoke at Jackson Hole, and Yellen is happy about the labor gains, but not so happy that she is ready to make a commitment to total success from a labor standpoint. Specifically, she commented at Jackson Hole that underutilization of labor resources still remains significant. She still sees the glass half empty, if you will. It may be half full, but it's half empty as well. In particular, she's concerned about the underemployment, the people, those workers who are working part-time, who would rather work full-time. Also, the capacity or the participation rate is at all-time low levels. So these are the concerns that Janet Yellen has in regard to the U.S. employment situation. There are some FOMC members who do not have those concerns. There's some members who think that the Fed may be getting behind the curve, and that they think that the employment situation has turned the corner and has its own momentum. Janet Yellen is not necessarily one of those just yet. And she's a chairman, she's the boss. So when she starts to turn her tune around, that's when you can expect the Fed to start thinking about easing conditions sooner rather than later. In the UK, the Bank of England's Carney said that we have to have confidence that prospective real wages are going to be growing sustainably before raising borrowing costs. Have to have confidence, not necessarily proof, but confidence that the prospective real wages are going to be growing. That's different than actually seeing the growth in the real wages. And in fact, he harped on that idea in his next comment when he said, we don't have to wait for the fact of that turn to raise rates. Governor Carney, in the Sunday Times interview that he gave, was a shot across the bow to the market that we don't have to see the wage inflation. We just have to feel it. Feel the confidence that the real wages are going up in order for us to think about tightening or look to tighten rates. So that's the newest perspective from the Bank of England's Carney on employment, wage focus. In Japan, BOJ's Kuroda said at Jackson Hole, we still think the underlying trend of consumption is relatively robust, and added that because employment income continued to increase, reflecting a strong employment situation as well as increasing nominal wages. It's all about wages within Japan as well. As long as real wages can increase, then you can expect that spending might increase as well. Spending will mitigate any sort of tax rises that we're seeing over there. The sales tax increase occurred in April. Want to make sure that the real wages do not lose ground to that tax rise. The less money in your pocket, you need more wages. So Kuroda is suggesting in his Jackson Hole comments that it's okay now. A lot of economists around the world do not agree with this assessment. They expect that the Bank of Japan is going to fall behind the curve and going to have to ease conditions later on in this year. We will be watching that data, watching to see if Kuroda and the Bank of Japan change their tune a little. They do meet this week. In Australia, RBA Stevens recently said unemployment not likely to show a sustained drop for some time. The Australian labor market, as mentioned earlier, is being hurt by a slowing in the resource sector. China slowed down their purchases of raw materials, and also the investment within the mining industry started to slow down. That took a lot of jobs out of those mining industries, and they're not being replaced by private sector jobs. And so there is this transition taking place from a mining economy to something more robust, something more internally derived outside of the mining industry. That's the puzzle that the Reserve Bank of Australia is facing, and they are working on making that transition. So comments in regard to that transition, or looking for employment trends that are outside of the mining industry that are improving, is what the market's going to be looking for going forward. In Canada, the Bank of Canada's Polos commented that persistent slack in country's labor market and a tendency to part-time job creation has restrained income growth. 75% of Canadian job growth has been part-time over the last year. 75% of the job growth has been part-time. If it was more full-time, then the labor situation would be much stronger. There might be inflation as a result of incomes rising. But with the work only being part-time, that inflation from wage growth is not occurring in Canada. This has allowed the Bank of Canada to keep the rates unchanged for 4 years. Remember, there was a point when the Bank of Canada was looking to tighten rates. They haven't tightened rates for 4 years now. It's unlikely that they do so until at least the first quarter, perhaps the second quarter of next year is what the expectations are. Finally, in New Zealand, the unemployment rate has been trending to the downside. In the second quarter, they issue their employment report every quarter. It fell to 5.6 from 5.9%, and it's the lowest since March of 2009. The participation rate, in contrast to the U.S., which the participation rate is at its lowest level in history, the participation rate in New Zealand is near its all-time highs at 68.9. The other thing that's helping the situation, helping keep from wage inflation to really take off, is that the immigration flows are more positive. So as the supply of workers starts to dwindle, that typically increases the wage inflation. But because we're getting more immigrants into New Zealand, and because the participation rate is going higher, because jobs are plentiful, jobs are easy to get, those people who didn't work before are now working, and so that is taking some of the wage inflation out of New Zealand, allowing the Bank of New Zealand to keep, Reserve Bank of New Zealand, to keep rates unchanged after raising them for 4 or 5 meetings in a row. They've since started a program of keeping the rates unchanged. That's not likely to continue as long as the unemployment rate continues to move down, because there are constraints as far as the amount of immigrants can come in. You can only get so many, and also the housing situation could become a problem there as well. So focus will be on that wage as well within New Zealand, and to see how the immigration flows and such happen there, to see if that employment becomes an issue in New Zealand. As far as this week, we do have 2 labor statistics coming out, one in the U.S. on Friday and also out of Canada on Friday. U.S. unemployment is due out at 8:30 a.m., and the unemployment rate is expected to dip down to 6.1 from 6.2%. Non-farm payroll is supposed to stay on track with the trend-like growth for 2014. We've averaged 229,000 jobs per month in 2014. We're expecting 2,025 on Friday. That is in line with steady growth, good growth, employment, continued growth in employment. Good news for taking or working through those people who need jobs. Hourly earnings supposed to rise by 0.2%, still fairly contained, and participation rate is the problem for the Fed, for Janet Yellen, or one of the problems for her and some of the members of the Fed. 62.9%. That's near all-time low levels for the participation rate. In Canada, we have the unemployment rate staying steady at 7%. Focus is going to be on the net change in employment, not so much the number. They're expecting 9.5 thousand jobs increase, but the breakup. Is it going to be all part-time, or is it going to be more full-time? If you can get more full-time workers, that would be more, remember, 75% of the jobs in Canada have been created from the part-time basis. So seeing a transition into the full-time employment would be bearish for the or bullish for the Canadian dollar if you get strong growth, and that growth is in the full-time employment. So that statistic is going to be very much watched on Friday. Participation rate is at 66.1. Other major events: lots of central bank interest rate decisions. Reserve Bank of Australia on Tuesday, 12:30 a.m. Wednesday, we have that's really tonight. Bank of Canada interest rate decision on Wednesday at 10 a.m. Bank of Japan interest rate decision on Wednesday night. Thursday morning, Thursday at 7 a.m. We have the Bank of England, no change expected there, and the ECB is supposed to announce at 7:45. There are some out there, a minority, who expect the the ECB to lower their rates even further, and that is either case, the market's going to be paying attention to what Draghi has to say at 8:30 in his press conference. If they do surprise with a rate decline, you can expect that the euro remains under pressure. It's likely to remain under pressure anyway. That's my opinion. So there you have it. A look at Labor Day and what happens on Labor Day here, and also a look at the labor situation around the globe. My name is Greg Michalowski. Good fortune with your trading this week. Bye-bye now.